Welcome to today's What Will Move the Market show. I'm your host Prem. It's Thursday, November 27, 2025, and here is everything you need to know as the markets open for today. Wall Street wrapped up trading yesterday on a strong note before heading into the Thanksgiving holiday shutdown. US markets rallied for the fourth straight session, with the Dow Jones climbing 0.7% to close at 47,427. The S&P 500 gaining 0.7% to finish at 6,813, and the Nasdaq Composite advancing 0.8% to settle at 23,215. This marks the best four-day stretch for US equities since May, as growing optimism around a potential Federal Reserve rate cut in December fueled risk appetite. Market participants are now pricing in roughly an 80% probability of a quarter-point rate reduction at the Fed's upcoming meeting. Among the standout performers, Robinhood surged nearly 11% after announcing plans to launch a futures and derivatives exchange with Susquehanna International Group, while Dell Technologies jumped 5.8% on record AI server orders. Nvidia rebounded 1.4% after recent weakness. On the losing side, Salesforce slipped about 3% following a price target cut by Citi, and farm equipment giant Deere fell 5.7% on a cautious outlook citing tariff pressures. US markets are closed today for Thanksgiving and will reopen tomorrow for a shortened trading session ending at 1 p.m. Eastern Time. Turning to Indian ADRs, the big banking names delivered a solid performance overnight. HDFC Bank rose 1.24% to close at $36.63, while ICICI Bank gained 1.27% to settle at $31.01. Infosys climbed 0.81% to finish at $17.42. Reliance Industries edged higher by 0.67% to $60.20. This positive momentum in Indian ADRs provides constructive cues for banking and technology stocks in today's session. Shifting to Asian markets this morning, Japan's Nikkei 225 opened at 49,869, up 310 points or about 0.62%, and is tracking higher by around 1.3%. Hong Kong's Hang Seng opened nearly flat at 25,946, up just 17 points or 0.07%. Meanwhile, Shanghai Composite opened marginally higher at 3,867, up about 0.08%. Now to the critical lead indicator for our markets. GIFT Nifty is quoting at 26,448, up about 60 points or 0.2%, signaling a positive start for Indian equities today. The broader Asian sentiment remains supported by Wall Street's gains and growing Fed rate cut expectations. On the global news front, geopolitical developments continue to simmer. President Trump's 28-point peace proposal for Ukraine has gained some traction, with Hungarian Prime Minister Viktor Orban expressing support, though analysts remain skeptical about its prospects. Reports of a possible Ukraine-Russia peace deal have helped cool crude oil prices. On the trade front, India and the United States appear close to finalizing a bilateral trade deal that could reduce the current 50% tariff on Indian goods to between 12 and 19%. Commerce Minister Piyush Goyal has indicated that the first tranche is near closure, which could provide medium-term relief for export-oriented sectors. Looking at domestic headlines, Indian benchmarks staged a powerful comeback yesterday, with Nifty surging 320 points or 1.24% to close at 26,205, while Sensex jumped 1,023 points to finish at 85,610. Bank Nifty touched a fresh all-time high of 59,555 before settling at 59,528. Foreign institutional investors turned buyers yesterday, pumping in Rs 4,778 crore, while domestic institutions added Rs 6,248 crore. The India VIX, our fear gauge, dropped below 12 to 11.97, providing comfort for bulls. The RBI's November bulletin has flagged heightened exuberance in global equity markets, but noted that the domestic economy shows signs of picking up momentum, supported by festive demand. Now for the technical setup. Nifty is just about 70 points away from its all-time high of 26,277. Immediate resistance lies in the 26,250 to 26,300 zone, with the next target around 26,500 if breakout sustains. On the downside, support comes in at 26,100 to 26,000, with a stronger floor at 25,850 near the 20-day exponential moving average. For Bank Nifty, after hitting record highs, resistance is seen at 60,000 to 60,300. Support lies at 59,200 to 59,000, with a stronger base near 58,700. Momentum indicators remain bullish, with RSI showing positive crossovers on both indices. In commodities, crude oil continues its slide, falling to around $58.34 per barrel, down about 0.5%, as peace talk signals between Russia and Ukraine weigh on prices. This softness in crude is positive for India's import bill. For today's trading approach, with Nifty knocking at record highs and volatility cooling off, a buy-on-dip strategy makes sense as long as the index holds above 26,000. The positive global backdrop, strong domestic buying, and falling crude prices create a constructive environment. However, with US markets closed and volumes potentially thinner, avoid aggressive leverage positions. Focus on quality large caps in banking, IT, and energy sectors that are leading the charge. Keep stops tight and book partial profits near resistance zones. Stay tuned for the evening wrap and send in your questions, and subscribe to this podcast to hear US every day.